Hello everyone, this is Market Recognition where we will study Amazon's share price, volatility, and behavior. First of all, the company was founded by Jeff Bezos in the mid-90s in Seattle, Washington with an initial funding of $250,000. Amazon leads the e-commerce sales in USA with a 40% share, and in second place with e-commerce retail sales is Walmart with just a 7% share. This is an abysmal difference between the first and the second place. At the same time, Walmart's price to earnings is a ratio of 32.7%, and earnings per share, which is the net profit over the volume of the amount of shares available, is a 4.32 dollars. As to Amazon, we have that the price currently this week is of $3,576 with a market cap of 1.80 trillion and a price to earnings ratio of 68%, which is high in comparison to Walmart and also to other peers such as eBay, Costco, and Target, which range between 25 and 40% of price to earnings ratio. For this, it's important to understand what moves the stock price, and what was performed here is a correlation analysis with historical data from 10 years, and we have that three variables correlate while other variables don't correlate and are closer to zero, meaning that they don't have a positive or a negative relationship. They don't have a relationship. They are more close to not having a relationship. Day is not significant for the analysis, but it is important to understand how the relationships of every of these variables work, and this is what we'll see in the next scatter plots. The high price and the close price relationship has a coefficient almost close to 1 of 0.99, and as you can see, a trend line fits almost seamlessly perfect in with the points that move positively in the same direction. Also, the low and the close price show a same correlation coefficient, and they move accordingly, as we can see in this trend line. The low and high price relationship also has similar coefficient correlation, which means that they move in a positive direction as the market is also fluctuating, meaning that if they go up, they will move in that direction, or if they go down, they will move accordingly in that direction. On the other hand, when you have a volume of shares and close price relationship, it's a coefficient of 0.047, almost close to zero, which means a weak to no relationship among volume and the close price. This means that they are moving in not any way that we can identify any significant patterns. So this is not, as I was saying, significant for us in the behavior of the share price. Lastly, I wanted to show you a simple moving average and high price relationship. We will discuss of this in the next slides. A simple moving average is a 20-day average of Amazon's share price taken from the close price. It follows a similar relationship like the high and close price scatter plot, and then we can see with the Bollinger Bands analysis that was constructed with the high and low prices, high and low bands, as well as the simple moving average. We use the standard deviations to calculate upper and lower bands. You could see that the simple moving average moves almost perfectly through the middle of the upper and lower bands of the share price, which is a very normal behavior or average behavior of the share. And ideally, it would be very good if stocks and share prices would work this way. People will be very successful. Not so experienced investors will be successful in the market if behavior were like this. However, if we do the Bollinger Band analysis with a close price and not with the simple moving average, we can see that close price has a higher volatility than simple moving average, and it touches both bands, high and low, through several points in time. As we can see, when there's a higher volatility, like near 2020, we can see that the upper and the lower bands are more separate. There's a bigger distance between them. And at the same time, when we have things like from 2012 to 2016, the price that it's relatively stable shows also the upper and lower bands are more close to the close price of the stock. For this, there are 4 different scenarios that were highlighted in the previous graph. In the first scenario, we have December 2015 through February 2016, where at December, we see that there is a peak in the upper band, so it's a good time to sell. And we should sell, and then we can wait until February to buy again at 600. After that, we go to the next point in the graph where it's October 2016 to November 2016, where a good idea is to sell at this point at 836 and then wait until February and buy at 719, making a $717 profit. Through July 2017 to December 2018, we could sell the share price at 1,039 and buy it again at $939 with a 39 profit. Or at the same time, we could also wait for September of the next year and sell it at 2,039 and wait for it to buy again at December at 1,343. However, an interesting fact here is if we would have bought this share at September 2017 at 939 and sell it at September 2018 for 2039, we would have had a profit only for one share of $1,100. In this scenario, we have that in March 2020 to September 2020, that we could buy in March 2020 at $1,676 and sell it in September at $3,542, making a $1,932 profit. After September 2020 and forward, we can see a high volatility of the share price with a high range of the bands, as you was mentioned, where there's high volatility, there is also a higher range between the bands. To complement this previous analysis, this well-traded indicator signals how traders are moving the stock price and the market in general. The volatility of the share price after 2020 shows whale's enthusiasm of the market recovery, particularly during the pandemic due to the nature of Amazon's business model, which solely focuses on e-commerce sales. Also, it's interesting to note that the shape of the traders as they buy and sell and the volume of their activities, it's very similar to the Bollinger Bands movement of the stock price. So we can say that traders can highly manipulate the value of the market in general. Lastly, we need to understand also what does price to earnings and stock price say to us and how this is very important to understand. So another correlation analysis was performed to see how earnings per share and stock price correlate with a 0.93 coefficient correlation. This means that they move in a similar direction, but that does not necessarily mean that this is the cause. Correlation is not causation. We must remember always this, and it's because also companies that are successful are the ones that are being followed by most people. And it's natural to say that as earnings per share increases, so does the stock price, because this signals enthusiasm for the market, and this also generates the volatility of prices and also overvaluation of companies in many occasions, like maybe the chance of Amazon, and also it may be due to the nature of the traders and other factors that we will discuss next. As we can see here, the price to earnings ratio and stock price relation, it's almost negative to no relation, meaning, and it makes sense because the price to earnings ratio is just a ratio between the price of the share and the earnings per share that was calculated and explained previously. This is the same thing to earnings per share relationship. And finally, the earnings per share and stock price does correlate, as we were mentioning, that they move accordingly and in a positive direction. So finally, what should we do as an investment decision after all that this was mentioned? As of June 2021, Amazon's share price is of $3,505. Amazon has a high volatility like it was seen in the Bollinger Bands, especially since 2020, and this can be due to COVID-19 and all of the fears that were present on the market and in many other parts of political, social, and government factors. It's also important to consider, as I was mentioning, that numbers are not the only thing that we can make our decisions and judgment on. This is just part of the analysis and complements many other things that we need to understand, like market decisions, social events like COVID, economical events like lockdowns, political factors like elections. So it's important to understand what signal, what's noise, and what to take and what to use in our favor. So as a final decision, what we suggest to do is to buy in June 2021 shares of Amazon, since at the last part of the graph of the Bollinger, we can see it is growing, and it's soon, maybe in 2 to 3 months, it could hit an upper band where it would be a good idea to sell it, and then buy again in 6 to 8 months, since the volatility that we have seen and experimented in the last years in Amazon shows that the price will eventually fall again, but then it would and we would buy until it rises again so we can sell. This can work among traders like the ones in the whale tracks that in the whale tracks graph we were seeing due to the volatility in price and chances due to the volatility of the price of Amazon and chances of buying and selling throughout these peaks and lows of the price. However, as an unexperienced investor or as a investor that does not necessarily do this as a hobby but as a method of gaining extra income, what seems more reasonable is to hold the action in the price of the action of the share in the long term to sell it in the next 3 to 5 years with chances of small tradings before year 3 or year 5 is met, just like the traders in the whale tracks graph was shown. I hope this was very useful and helped you understand better how share prices behave, particularly the one like Amazon. Thank you very much.